So at the end of 2021, I made a bold prediction that I believed that the overall SPY, the stock market, would pull back at the beginning of 2022. Here's the actual video proof with the date and all that fun stuff. I ended up today buying the $472 puts that expire at the end of January. I'm thinking that we're going to get some type of pullback here in the beginning of January and pull back at least to the support area there at the 460s. If we pull back to 460, that's a $12 move. So now that you've seen the proof that I made the call long before this move happened, let's talk about what went into this thought process and what was my reasoning behind this big move in the market. Breaking it all down right here in this video, so make sure you stay tuned. What's going on, guys? Patrick here, and today we're talking about my 2021 end of year plan and how it all played out so beautifully today. The market taking a big old dump today, but hey, we bought the dip. We sold the puts, we bought the dip, and now we're ready for the rally back to all-time highs on the SPY. Let's take a look at the chart and talk a little bit more about my overall idea and why I believed this would happen the way that it did. Now, one thing that I want to point out is in the past, as a beginner retail investor, I would have done things a lot differently, right? So my overall thesis when it comes to the market is basically what I believe will happen normally is the opposite, in the sense that if I think the market's going to go to the moon, well, there might be a reason that I'm a little bit too much FOMO, or maybe there's something going on that is kind of clouding my judgment. So I really should be looking at the charts, and I think the charts are so important to look at for many different reasons. A lot of people believe that, you can just buy stocks and just hold and just, buy, never look at this, never look at the chart, right? But really, if you look at the chart, you can create a biasness that will lead you to having the right entries in terms of being long or being short or buying the dip, selling the rip, things like that. So looking at the SPY right now on the chart, what do we got going on? So we see these lines, these yellow lines. We drew these back in 2021, the end of 2021. So we'll get rid of these now. But what I want to point out here is one very, very key thing that's been happening with the SPY and this overall trend. So back there in December, the beginning of December of 2021, we bounced off this 450 area so beautifully. And now what I want to point out is if you look here at the Ripster Cloud EMAs, which you can pretty much use, I think, for free on TradingView, you go to Ripster EMA clouds, it'll pop up there, it'll show you these clouds and give you, I think, an advantage when you're looking for support or for reasons for the market to either go up or to go down. And we can see how we bounced off this level at the 450 area at the beginning of December, right? Hey, if you enjoy these videos, do me one big favor, hit that subscribe button. Let me know down in the comments below. I'll be giving away a little giveaway to one of my subscribers who predict the price of the market on the SPY by Friday. So let me know down in the comments, what do you think the price of the SPY? Will it be 470? Will it be 480? Will it be 450 by the end of day on Friday? Let me know in the comments below. Whoever is closest to the actual closing price of the SPY on Friday, I'll send you a little gift. Money, money, money. Let's go. Back, we rallied up here to a high at that 471. We had another big dip, and guess where we ended up at? We ended up right back down here at this 450 level, which was also right where that overall EMA cloud is there. And then we ripped back to the moon. We got up here to the 480. Now, what's funny is at the end of 2021, we were right here at 475, and that was when I was buying my 472 put options that would expire at the end of January. And one thing that I want to point out here is, I could have bought lotto puts, right? Like I could have bought, 456 puts or 450 puts, hoping and praying that the market would get down to that point. But with my experience over the years, I've really learned that buying lotto puts, even though they're cheaper, doesn't mean they're the best play. Just because you think, oh, wow, these puts are so cheap or these options are so cheap, I should buy them. Just because something is cheap does not mean it's a good investment, right? Just because you think that the upside return is going to be that much greater because you're buying cheap put options, it doesn't really work like that. When it comes to options, I think the best thing to do is really try to time the market, or try to time your entries so that you can buy those put options or those call options that are closer to in the money. I would say maybe 2 or 3 strikes depending on the overall stock you're trading. But for the SPY, really you should be focusing on, maybe maximum of 5 strike prices, meaning if the market's at 462 here and I want to buy call options, the furthest out that I would buy in terms of upside call options, would maybe be 467, 466, based on the overall idea of where that market might move. Now, if I'm looking at it right here, and let's say I want to buy call options, today I ended up buying 462 call options when we were down here at the 456 because of the major gap in the chart. So I thought, okay, we're going to bounce back off this. We're going to push up here. And then if we do push back up, 464, 465 should be our target in terms of a realistic move. Now, if we push to 472, we push to 476, that's even better for business because I have 462 call options. So if we push to 472, that's a $10 move in the premium there. And that's exactly what we're looking for when it comes to looking for big time moves here. And like I said, we're kind of protecting ourselves because we're being realistic in the sense that we're buying 462 call options, which we're already back above 462. So when we were down here at 457, the market looked really bleak. It looked like it was all ending, like it was the end of the world, right? We're all going to just basically lose everything at that point, like kind of like, oh, it's all over. But you can see how we bounced off of this level that we currently, we pulled back to this level before. We bounced off 456. We bounced off this level back there. We bounced off this level back there. So we've got kind of this pattern where we're pulling back to this area. It's basically proving that there are buyers at these levels down here. And we've been getting these really kind of ripsaw big moves back to the upside. Now, again, you might wonder, like, why did I think that it would be a good idea to be buying put options when we were up here at the 476 area? Patrick, why did you buy put options? And I think that's very simple to go back to the idea, like I said, when I was a beginner investor, I would have been buying call options when we were up here because I would have thought, okay, we're going to break to the upside, right? Like we're going to go from 475, we're going to go up here to 480, 490, and then $500 at the beginning of January here. But the more that I looked at it, when I was looking at it like this, we get rid of those candles, I could basically see the pattern that we had going on here. And I talk about this in pretty much all my videos. The overall idea that stocks move in waves, right? We go up, we go down, we go up, we go down. So when a stock is pushing up, there's a much better chance that the stock does pull back at some point and then starts to move higher. It doesn't just go straight to the moon, which you can see here. We pulled back, we pushed up, we pulled back, we pushed up. Now, we did make a new high up there to the 480 area, but before then, before just going straight to there, we went and pulled back, we pushed up, we pulled back, we pushed up. So that's one thing that I'm always thinking about is how the market is going to move in these waves. Like, is the market just going to go straight up from 475? No, I didn't believe that would be the case. I also knew that we had a lot of stuff going on with the holidays, with the virus, with the new numbers coming out, with stuff with the Fed and all that going on as well. So I kind of was predicting the idea that we're going to have some volatility going into the beginning of January, and then we would get a nice pullback down here to the 456, 450 level. So those $472 put options, well, they printed beautifully. And today, buying call options, it might seem dangerous or it might seem kind of reckless as the overall market has been going lower and lower. But looking at the chart, we see, that we're basically at the bottom of a wave here, right? We're at the bottom of a wave. And if everything kind of plays out the way that I'm thinking it's going to play out, well, then we're going to get a move like this, and we're going to start to move back up into this. So we're going to go and then rip back up. Now, is that to say the market can't go lower from here? No, obviously there's always a chance, but we know that there's been multiple touches of this area. We know there's been multiple touches of this EMA. And again, something that I probably would have done differently when I was a beginner trader or beginner investor here is I would have ended up buying put options today, right? When the market opened, let's look at the 15-minute chart to see a better idea. When the market opened, it started tanking. And in the beginning, when I first started trading, I 100% would have ended up buying put options down here at this 460 level because I would have been looking at it like, oh, wow, the market's tanking. it's just breaking down, it's going lower and lower. So I would have been like, I want to be buying put options because I would have just been a beginner, right? Like I wouldn't have understood the overall idea of these waves. So I would have bought put options down here. I would have got out for a loss here. I probably would have bought more put options here. And then I would have got out for a loss here. And then again, I probably would have bought call options up here because I would have went like, okay, I lost money here. I lost money here. Fuck it. I'm going to go long now and I'm going to ride the wave higher. And then guess what? I would have ended up buying the call options and I probably would have ended up getting out for a loss. So 3 ways, pretty much 3 different times I would have ended up getting screwed on this trade here. And that would have been just because I don't look at the overall chart. I don't look at what's going on, especially on the bigger time frames. On the daily chart, you can clearly see that this area here is a reversal area. It's a pivot, a reversal. The idea the market would then push up and want to push higher up to that 480 area from here. Now, obviously, like I said, it can always go lower. There's always that chance. But I feel like as a investor, if I can have a 75% chance, looking at this now, I can't really say there's a 75% chance that this is going to happen. But the way I look at it is that every single touch of this support area is basically showing us that there is a higher chance of a reversal than a continuation of a crash. Now, maybe the market pushes up here to the 470, it gets stuck, and then we crash through. See, now that's a different scenario. If we push up here to the 470, we don't push up to all-time highs from there, and we start to turn back down. Well, then at this point, at the 470 level, I might be looking to buy put options because I know that we got stuck here. We can't, we're showing that we're losing momentum. It's really based on what we're seeing with the chart and things like that. But right now, that would be kind of my overall play. If we push up here to the 470 level, we get stuck, then I might look to sell my call options and then buy the put options. I have call options that expire on January, I think it's January 24th at the end of the month. So I'm expecting at least a move up here to the 470s or higher. 476 would be beautiful. We get that move up there on those 462 call options. Well, that'll be off to the races and we're going to make some money, baby. So that's kind of what I'm looking at. Remember, it's all about the wave, right? Where are we at with the wave? Are we at the top of the wave or are we at the bottom of the wave? Do I want to be shorting at the top or do I want to be buying at the bottom? Really, that's the way to make money. Buying low, selling high. When I first started trading, I did the opposite. I would end up shorting at the bottom, and then I would end up buying at the top. And I did this over and over, and I'm sure a lot of you guys out there have done this as well. We're getting a lot of volatility into the end of the day here. I would like to see, let's get a close over the 463 level. We get a close over 463. I think we can push to 470 the next few days. No issue here, especially with some of the news that's coming out in the future. And I think we're going to get some good news from the old Fed and all that fun stuff to pump this market back up. We got to keep this market moving forward, baby. We know one thing. You buy the dip, you sell the rip. And well, when the market's crashing, it might be an opportunity to be buying the dip. And especially when you're looking at the daily chart and you see, that there's so much stuff going on with that level. Well, it's time to make some money, baby. It's time to go. So there it is. If you guys haven't already, do me one big favor. Hit that subscribe button, hit a like button, and let me know down below. Did you guys buy put options at the end of 2021, or did you buy call options? What do you guys think? Do we go higher from here, or do we go lower? Let me know in the comments down below.